Welcome to my YouTube channel. This is my series specifically focused on the option selling, which I am doing every day. So I am posting video each and every day what are the trades I have taken, and I will try to explain my trades with the help of the charts, and I take each and every bar analysis bar by bar and try to understand and try to focus on which direction the price will probably move, and if possible I will try to take the trade, and I will show you all my contract notes. These are my contracts note. I will share you within few minutes. So let's first go and take some time to what are the rules which I am following. So I only follow one time frame, that is the 5-minute time frame, and I specifically focused on what are the candlestick patterns are being formed within the 5-minute time frame. Okay, second is I only take into consideration price action, no indicators, no external tools. I try to study all the candles and their behaviors with previous candles and what are the price which is moving according to that. My risk to reward ratio is, if I'm risking 10 to 15 or 20 points, my reward is 1:3. Means if I'm risking 10 to 15 points, I will try to take more than 30, 35, 50 rupees. So this is, and depending on the market condition, I will try to exit or enter it again. So what I am trying to understand is the buying and selling pressure in respect to candlestick. What are the bulls trying to do? Bulls try to take the market up, bears try to make take the price down, and by doing this they follow a specific path which is generally represented on this candlestick. So I try to analyze each and every bar by bar, and I will try to explain it and give me my views. So trade discipline and selection, I try to avoid bad trades. I do not try to take unnecessary or low probability trades. I completely avoid counter trends. Counter trends means if this is a move, this from 7 to 18 is a move, then this is 18 to 24 is a counter trend. So never try to take this trend into your trading. So and do not take unnecessary trades. I will show you what are the unnecessary trades and which are the low probability trades, and this is also important in which side the sometimes the price forms a trading range. Means this is just like a trading range, and sometimes it happens that we start assuming the breakouts on either of the side, upside or downside. We should first wait for the confirmation, and my setup is I focus on the second leg after the first breakout. This is my theme, or you can say this is my strategy. So I pay close attention to the previous highs and previous lows when it breaks down, and this is my entry setup. Means once the signal bar has been formed, and if I'm going long, if I'm selling PE, once the high of the signal bar hits, I enter the trade, and if I'm going short, means I'm selling CE. Once the low of the signal bar hits, then I will enter the trade. So let's get back to today's chart, and today is 20th April 2026. Okay, so as you can see that the very first bar, let's see on the okay, the very first bar, as you can see that it is overlapping the previous day. So this is the bar 1, and bar 2 was an engulfing bar, and so for an experiment, as it is not recommended to go into initial trade first we have to see in which direction the market is trying to move. Most of the time there are 60 to 70% the market opens up and it try to reverse, which it has done over here. But even after that, I have once the bar 2 was broke on bar 3, let's see, bar 3 it's 925. I took a trade and I sold a PE around 270 rupees, and I immediately put a stop loss at 15 rupees, and I booked the loss at after 5 minutes, because as you can see that I sold PE over here and it moves down. So this happens, and if I had waited for some reversal pattern, this is a very good reversal pattern. I should have sold below bar 3, but I was biased that market, because of this bar 2 I got biased that the market will move up. So now what my system says that if there is the first leg has been formed, and enter for the second leg. Okay, so this is my rule. This is my rule that I always focus on the second leg. And so during this, after bar 3, bar 4, if suppose considering that one bar from the low of bar 1 to bar 3, this is a good move, this is a leg, then this can be considered as a leg, or this can be considered as a deep pullback. So system says that if I am buying high 1, it means the very first time the market tries to break above the previous high, that will be considered as an H1 buy setup, and it should be a bull bar, not a bear bar. So considering this, if I want to go long, then as I have taken a trade above bar 2, I should be taking a trade above bar 4, but that didn't happen because the price didn't went above bar 4, and after that bar 5 happened, and the price of bar 6 didn't go above bar 5, and as you can see that bar 6 formed and bar 7 formed. Now you can see that this is a very deep pullback, and you should not considering going long around this point. After the market has been formed, it is very easy to say that we could have entered over here, but no, this can be considered as a counter trend. So what happened is that the system says that now I was looking for a short, because this is a good leg and there should be a second leg. Now going for a short, I need to sell below. So this I have initially placed a order for going short below bar 9, but that didn't happen. This can be considered as a low 1 sell setup, but my 9 the price didn't went below 9, and this bar 10 happened and bar 12 happened. So as you can see that early in this range the market has trapped the bulls, market had trapped the bears, and again the new bulls have come into power. So this can be a setup where market has reversed twice, and there is a chance that the market will move forward, because after 2 traps the third attempt is going to be successful. So on bar 12 I shorted one PE. I will show you. So at 10 I will show you at around this, on this bar 10. So on bar 12 I enter into a trade and I sold one PE around 280 rupees, and around 1140 is this. So 1140 is around bar 30 or 29 or 30. I booked my profit of around 215. So I almost took 65 rupees of profit. So, and after that I didn't trade because earlier my 2 days were very bad, so I was very nervous, and this was a good day for me of getting 65 rupees of profit. So I got uh, 3,285 rupees of profit, so it was good for me. So I didn't trade for me on that day, but this happens. Now let's see, because I entered over here, this was, you can say, now considering this high, previous high, as I was talking about, bar 1. So bar 17 broke bar 16 broke the high of bar 1. Okay, now there is at least 2 pullbacks. Now this is a very tricky condition to trade, because after this big move there has to be a second leg. Okay, so as you can see that bar 21, high of bar 21, this is considering as a buy H1 buy setup, and after that price went above this, and generally we should not take the H1 buy setup, actually we should take the H2 buy setup. So the price went above this and bar 23 formed, which trapped the bulls. Those who have taken the trade over here, they just they were shaken by this bar 23 and knew, maybe you can say that this can consider as a failed breakout, and most probably there will be many bears who have tried to taken that trade, but bar 24 formed. Okay, bar 24 formed, and it is a bull bar, a small body having wick on two side, and this is considering to be an H2 buy setup. So buying above this buy above this is considering a good trade, but after that there was a follow through bar 26, 28. So this is around 20 to 25 or 30 rupees, or around 25 rupees of profit. So if I would have bought around this, I might have got out at a break even, because I was hoping to get a good follow through. If I would have taken this trade, I would have not exited around this place. I might have got out at break even. So that is nothing wrong in going at break even, because in trading selling options, if you are buying around this place and again putting your stop loss around this is almost 15 to 20 rupees. Okay, and this is as the same target of 15 to 20 or 25 rupees, but our target is 1:3, 1:4, getting more profit. So I entered around on this level, so I exited at bar 31. Luckily this was the top, but many times it is not that you are lucky. Maybe you get exit over here and price goes more up, but I would have taken something loss over here, but it was okay for me to take this trade. Now as you can see that we should never take this counter trend. This is, I was talking about, this is the counter trend. We should never enter short over this or this place, even if it looks lucrative. Many times 10 means 5 out of 10 you will be able to judge this, but other 5 in which we have taken this trade, I have occurred huge losses, and because of that I had never booked profit. Means my account was never green profitable. So this is counter trend, this is counter trend, this is also a counter trend. We should never try to take such counter trends. Okay, this, as you can see that after that this is double top and selling below 45 could be a good trade. I have not taken that trade, but if you were in a profit, if you are in a position that taking a short around this place, considering this as a double top and just putting a stop loss as 10 to 15 rupees, losing 1000 rupees on this 1000 rupees, the move is around 50 to 60 rupees of move. So this can be considering as a double top, but I was not in a focused position of taking this trade. So, and because first there should be a break of a trend line, and there should be a test of that break trend line, and then the market moved down. But this happened something differently, so we have to be well prepared of this unexpected move. This was an unexpected move, this was an unexpected move, and this was also an unexpected move. But if our system is good, then we will be saved by taking trade which are not possible, because I was saved if I would have traded below bar 9, but that didn't happen, and this happened. So I got saved from this trade of getting. Otherwise I was thinking of taking this as a first leg and going for a second leg. Because of that I got saved. So this was my day actually. And secondly, I was hoping to, now after that, considering this scenario, let's understand from bar 51 to bar 61. Okay, you can see that price went up, down, up, then a little bit of pullback, then up, then pullback, and then for the third time it went up. So this, you can consider this as a central point, and most of the trading range take place. And you can see that first of all we can think that after this this can be a pullback and there will be a pullback down. But many of the times market tries to shake the traders. They want to trap bulls and bears both at the same time. So this is clearly been seen over here. What happened is, there is a downside move and there is a trading range, means bar 53, 54, 53 is a bear bar, 54 is a bull bar, 55 is a bear bar, 56 is a bull bar, 57 is a small bull bar, 58 is a red bar with a long tail, 59. So this is one kind of trading range, and I was hoping to enter for a second leg. So you can consider taking this as a trend line, high of 54 and high of 61. This is a trend line and this is the first leg, and you can go for a second leg. So over here my buy should be above. If I am going for a H1 buy setup, buying above, but this is a red bar. I should have considered a green body. I would have considered the green body, and if it hit the high of this green bar, I would have gone long. This was my setup. But bar 65 high didn't broke by 64. By bar number 66 didn't broke the high of 65, and 67 happened. And as you can see that bar 61 low has gone below bar 60, bar 69. So these are the bulls, or these are the trapped bulls which wanted to pull the market up for a break even, and because of this happens. So considering this as, means you cannot consider this as a pullback, or you should not enter for a second leg. If this bar 61, 62, 63 has a pullback of around this area, if the bar 67 low, or this is the place where pullback happened, we can take a pullback, we can take a bet and go for a second leg. But as you can see that I was avoided because of my system. My system says that I should go for a long only on H2 or H1 is when it is a very strong move, then and then you should go for H1 buy setup. So I got saved, and this happened. And if I would have entered, many times we see this is a perfect trap. That bar 67 I used to enter above this, hoping that this is going to be a big move, but many times this get trapped, and these are the trapped bulls. These are the trapped bulls. They thought it will go again, and over here those who have sold this, they also got trapped. So market tends to shake the traders. They don't want the bulls or the either the bears. They want both of them to be trapped. If your system is good, you won't get trapped, or even if you get trapped, we will be getting trapped at these places. So shorting below bar 45 after the move, you can say that I will never have taken this trade, but this move and this move could have taken this into consideration, that we can consider this shorting below by bar 45 could have been reasonable. If even if our 10 to 15 rupees stop loss have hit, it is not a big deal, because this is what is the reward which we are getting. And over here going for a second leg, which didn't happen because of our system. So this was my day, and after that, as you can see that so considering this as the first leg, you can consider this as a pullback, and this is the first leg, second leg, and this is the third time it tried to break above, and eventually second leg happens. So this was my day of